Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club. And with the market having taken a coronavirus crash and then a big bounce and then lots of volatility up and down, the question I keep hearing these days is what is the market going to do next? And it's a good question, but unfortunately, there are no good answers because the fact of the matter is nobody knows what the market's going to do next. Not the chairman of the Federal Reserve, not Warren Buffett, not Donald Trump. Nobody knows what the market's going to do. And so it's kind of like asking, what's the weather going to be like 2 weeks from Thursday? Because you can make any kind of answer you want, but there's not any good ones. And it's crazy to actually run your portfolio based on your guess or somebody else's guess about what the market's going to do. So that leaves people often saying, like, well, if I don't base my portfolio on my thoughts or guesses or predictions about what the stock market's going to do, what should I do? And the short answer is you should instead be looking at businesses. What is the outlook for this particular business? And for instance, one of the things that we do with the Oxford Club is we evaluate every business and look at what's been happening and what is happening to get a good idea what might be happening 3 months, 6 months, 9 months down the road. And this give me a few examples of the things that we're looking at. We're looking for companies that are showing a double-digit increase in sales. It's got to be at least 10% or better in the most recent quarter. We're looking for at least 3 quarters in a row of 20% or more earnings growth. Earnings, of course, are the profits of the business. And in the most recent quarter, we want even stronger earnings growth of 25% or more. We're looking for companies that are innovators, creating new products and services. We're looking for companies with excellent management because you never want to lose sight of the fact that corporations are like sports franchises. If you have a team, you have to have a Phil Jackson or a Bear Bryant or a Vince Lombardi at the helm to make sure things are being maximized. We're looking for companies that have strong institutional support. You don't want to lose sight of the fact that most of the volume that takes place in the stock market is institutions like mutual funds or endowments or hedge funds or pension plans. And you want them to be buying the same stocks you're buying, because if you're buying the stocks they're selling, they're just going to be pounding the stock day after day, week after week, because it takes them a long time to either invest or divest a position. So all these factors are important, and it really comes down to not guessing about what lies ahead for the economy and not guessing about what lies ahead for the stock market, but focusing on the individual businesses and how they're doing. And if they are beating expectations on a regular basis, those stocks are going to not just do well, they're going to outperform the market. So that's what we're focusing on. Great companies with better expected earnings. That is where you're likely to get your market beating performance in the weeks and months ahead. So think about that. And for more information, feel free to check in with my daily e-letter, Liberty Through Wealth. You can just click on the link below. The subscription is free, and I'd love to share my thoughts with you several times a week. So for now, this is it. Alexander Green signing off, and I hope to talk to you again soon.